Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
I want to get to our Drive to the Close guest. Back with us is Joyce Wong. She's Senior Client Portfolio Manager for American Century Investments. They have about $282 billion in assets under management, and she's back here in our Bloomberg Interactive Brokers studio. When you're back at American Century and you're surrounded by your team and your colleagues, what is it that you talk most about?
I mean, right now, there's actually a lot of things going on. So as a fixed income person, usually we're in the boring part of the market.
It's not boring.
There's a lot to talk about. So recently, it's obviously been the jobs number, inflation, looking at the underlying data there, thinking about how to understand the 3% GDP number we saw, and really talking about tariffs, right? So it's everything of the above, just given how rates have been relatively calm despite a lot of this news coming out. So
when you look at, the 10-year yield at 4.20, we've been talking about a lot the last couple of days, especially considering the structural measures that should be pushing yields higher, right? We were just talking about with Stuart Paul from Bloomberg Economics. What's holding us down this low for now, and does that yield bounce?
Yeah, we think the 10 years likely to be range bound for the rest of this year. The issues that are keeping it down would be the data, right? So the hard data is finally starting to soften. At American Century, we've been thinking that the slowdown is the most likely scenario for the economy in the US this year. It's finally showing up, right? Jobs number was first. So that fear, even if it's a small risk of recession, is going to keep the 10-year below 5. We think likely the range is 4 to 4.5.
Longer term, though, you think, we talked with our Stuart Paul about demographics, baby boomers, the debt, the U.S. debt. That longer term, what did he say? Up above 6% on the 10-year.
6% is the long-term natural rate, which, that's shockingly high for the 10-year yield, right?
That would be extremely high. Yeah. Again,
does that factor in ever into your discussions when you look longer term?
Longer term, yes. So the most frequently asked question I get is the deficit in terms of longer term things. That is obviously going to be a problem that needs to be resolved. As investors, we're thinking more tactically. So let's say 6 months, a year, 2 years. It's more short-term trends rather than these burgeoning long-term trends. But yes, that is something that weighs on our minds. And you do get these bouts of volatility by scares with the deficit.
So you buy what in terms of the U.S. Treasury market?
So we're actually liking the short end of the curve right now. So not Treasuries, though. We're looking at income opportunities, because while spreads are pretty tight across corporates, across securitized markets, our PMs and analysts are looking for areas of the market that are less trafficked. So looking at, smaller deals, secondaries on the corporate side, looking at potentially high yield names that are going to be upgraded rather than downgraded, looking at non-traditional asset-backed securities, stuff that's not in the index.
By the way, is there a cool name for that? Because I know if you're like in the B's and you fall down, you're a fallen angel, right? Is there a cool name for junk that becomes investment grade?
It's rising stars.
Oh, that's pretty clear. Look, spreads are so tight, right? And we just saw, I thought the Wall Street banker bonus story was amazing, because equity underwriters are not getting paid and debt underwriters are. It tells me that, IPOs just aren't there and everybody wants to sell bonds. Is that market going to stay open like that?
I hope so. And I hope that, asset management bonuses for fixed income people are up too.
We hope so for you also.
But yes, one of the biggest changes that we've seen since rates have gone up in 2022 is that things that were booming from the global financial crisis until then aren't quite so attractive. Things like IPOs, private equity, private credit, stuff that worked when rates were at 0 suddenly don't when rates are at 4.
But why is everybody why buy corporate debt when spreads are this tight? Is it just they're so happy to be getting some yield? And
I mean, you have to look back to the global financial crisis to get anything close to where we are today.
You were there.
I was there at Lehman Brothers.
Lehman Brothers, right? Yeah.
Yes. So I was there the last time we saw yields this attractive. And I think when you look at institutional investors and retail investors, advisors, most people are trying to get, let's say, 7% on their portfolio. If you can get 5 to 6 on high quality fixed income, that looks pretty attractive.
But high quality. Especially if you think growth is slowing down, right?
Yes.
At this point, you want to be pretty picky and pretty choosy.
But high yield spreads are tight too.
They are. So we're selective in high yield. It's, again, those rising star stories, very select idiosyncratic names, not beta. Definitely, I don't suggest going passive in this environment.
Joyce, what's the implications or impact of tariffs that have an effective rate of 15 to 16%, the highest since 1946? Very different than the world that we've been living in. What is, though, ultimately the impact on companies, as we look longer term? And I think about whether it's their debt positions or their equity positions, whether I look at, across the balance sheet in terms of margins, profit growth, like what's the impact? It's a different environment, right?
It is. And that's what we've been really paying attention to during earnings calls, because while the tariff situation is just getting finalized, I think companies are still deciding how much they have to absorb, how much in concessions they can get from their suppliers, and how much they can pass through to consumers. And that's where I think the active management piece comes in, because it's going to impact companies in different sectors and in different leadership positions differently, right? So if you have pricing power, you can pass through your price increases to the consumer. And if people love your brand, they're going to be willing to buy it. But in terms of corporations, the debt coverage ratio is very strong. So despite tight credit spreads, corporations are in a great spot. There's no risk of big defaults happening even in high yield. So we're not terribly concerned about that aspect of it.
It's crazy considering, if I had told you at the end of last year, Joyce, we're going to have, tariffs at 16% on the rest of the world, what would you have forecast?
Yeah, well, I mean, we were definitely thinking at the end of the year when President Trump was elected and he started, during the campaign, he was targeting stuff and released tariffs up to 40-50% on Liberation Day. We were thinking recession was going to be the most
Empty
likely
shelves,
scenario.
Massive inflation.
Yeah.
Is this just companies really focusing on their balance sheet? I just think about this since the great financial crisis, and then, layer on top of that, the pandemic. I mean, CFOs working with their CEOs, making sure that they've got maybe not fortress balance sheets, but pretty close.
Yes, absolutely. And that's where our corporate team is actually partnering with CFOs and the finance teams at companies to approach them when they see debt coming due in the next 1 or 2 years. They'll go to them and be like, we know you don't want this to get to the level of attention of your CEO asking how you're going to refinance this debt.
Right.
Let's work together and come up with a way to refinance your upcoming maturities.
So that group really busy because that's what's happening?
Yes, exactly. So we're looking for those opportunities. Again, we're not just buying the broad index, but we're looking for these unique opportunities to generate some alpha on a security selection basis.
Great to have you here. Thank you.
Thank you.
So appreciate it. Enjoy the rest of the summer. Joyce Wong. She is Senior Client Portfolio Manager at American Century Investments. We mentioned $282 billion in assets under management right here in our Interactive Brokers studio. Be well.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, India's government is scrambling to contain the economic fallout from President Trump's threatened tariff action, which has left some officials in New Delhi reeling. Meantime, in terms of what we got from the president earlier this morning on CNBC, he talked about maybe U.S. tariffs on semiconductors and pharmaceutical imports, which would be announced, quote, within the next week or so. This as the administration really gets ready to target key economic sectors in its effort to remake global trade. Here's what the president said.
I'll go into pharmaceuticals. Yeah. They make a fortune with pharmaceuticals, and they make our pharmaceuticals in China and Ireland and everything else. And pharmaceuticals, we'll be putting a initially small tariff on pharmaceuticals, but in 1 year, 1.5 years maximum, it's going to go to 150%, and then it's going to go to 250%, because we want pharmaceuticals made in our country.
All right. That, of course, was President Trump earlier on CNBC. One thing, Matt, I want to add to that. The U.S. is looking at ways to equip ships with better location tracking capabilities. So
chips. Microchips.
So
like they want to put an air tag on those tiny, eensy-weensy, itsy-bitsy little microchips.
Yeah. Like, you know, that,
good luck.
Like that Apple tag?
Yeah.
This is to curtail the flow of semis made by the likes of Nvidia to China. All right. Tracking all of it, there's a lot coming at us, is Bloomberg News senior editor for technology and strategic industries. He's Michael Shepard. He's out there in our D.C. bureau. Mike, a lot going on here. Get us up to speed on what we are hearing from the president when it comes to various sectors and what we are getting in terms of still waiting for terms with some big trading partners.
Well, on the tariffs front, one of the most significant things that we heard from Donald Trump today was a timeline for both the pharma tariffs and the levies that we have long been expecting to come on semiconductors. He has been going sector by sector, as we've already seen, in addition to his country-by-country reciprocal tariffs. But he has already targeted the auto industry, the steel and aluminum industries, with levies aimed at trying to boost more output and production here at home. And next, he's moving on to the drug industry and chip makers. And the idea is, again, to try to get them to build more plants here in the U.S., spur domestic investment in plants and production, and maybe try to boost hiring as well, and perhaps also goose some exports in those areas. It's going to be a long road, though. Even if he announces those tariffs in the next week or so, it will take years for those plants to actually be built, for companies to migrate. And in the meantime, a number of companies, businesses, consumers will face the prospect of potentially higher costs based on the increases in those inputs. Remember, chips are in everything. It is not just the AI accelerators that we heard so much about from the likes of Meta Platforms and Microsoft Corp when it comes to their AI businesses. It goes down to all the way down to things like those light-up sneakers that small children wear. They're in cars, they're in everything. So businesses have been bracing for this, and they're going to have to really read the fine print when those tariffs come out to see if there are any exemptions whatsoever. We're not expecting any, but some companies are still holding out hope.
You know, we just report the news. Yep. We don't editorialize or give our opinions, but you got to point out when something makes no sense at all, Shep. And the president on Sunday said he was going to lower drug prices for American consumers by 1,400 to 1,500%, which is mathematically impossible unless drug producers are paying customers. At the same time, he wants to have tariffs at 250% on imported pharmaceuticals, which is almost all of them. So how does any of that make any sense at all?
Well, the math really is not working when you lay it out just on paper. He even talked today about increasing the drug tariffs, starting small, and then after a year increasing very significantly to 150 or 200%. Matt, if you think about trying to build a drug plant, it takes years for that to happen. Let's think on a 4 or 5 year timeline. And he is not talking about that. He has a sense of urgency, and he wants to see these results immediately. In his mind, these plants should already be underway, and he is expecting investment from U.S. trading partners, including the European Union, from Japan and others, to really start plowing that money into the ground and start getting those factories underway.
Mike, what do we know, though? I mean, already we've talked about Puerto Rico, right? Certainly in the past being a big home to big pharma. There's been some back and forth there, but I mean, we already do it. Is it that we've maxed out what we can do, or what?
Well, part of the problem is that a lot of other jurisdictions outside the U.S. have for years been lower cost, and they have offered themselves as a venue to produce these medicines and even medical equipment at a far lower cost. And that actually has benefited consumers here in the U.S. over the years. Even though it doesn't look like it, producing a lot of that material here in the United States would be more expensive based on labor costs, land costs, regulatory hurdles, and other things. Some of these the president has promised to sweep aside, especially in the land use and permitting and rules-based side. But there are other structural issues, too, and that includes the labor supply and whether there is a workforce. And this is especially true for semiconductors and other advanced technology. Having enough people who can move into the precision tooling, the advanced engineering jobs in the factories that could step in and take those jobs right away. And Matt, when you were asking about the math question, when it comes to chip making, one of the biggest inputs in a new plant, and these are the kinds of factories that the president and his team want to see built across, in certain locations in the U.S., one of the biggest inputs is the semiconductor manufacturing equipment itself, the deep ultraviolet lithography machines made by one company in the world, and that's ASML in the Netherlands. Now, CHIPS tariffs could increase the cost of those machines, which run about $400 million apiece, by another as much as $100 million. And for companies that are planning those plants, it is a big cost to have to absorb all of a sudden.
Well, maybe that's why when President Trump was talking about the TSMC investment in its Arizona chip-making plants, which has previously been stated at $165 billion. The president said now it's a $300 billion investment. He just doubled that number. Also for fun, I want to ask about chips, Shep, because the idea of putting a tracking device on our teensy weensy, itsy bitsy, most advanced AI semiconductors. I mean, the space constraints, the thermal budget, the power consumption, the signal interference, seems like it would be difficult.
It's a great question, and I've asked folks in the chip industry whether this capability is theoretically possible, and they have said yes. But they are wary of doing it for a number of reasons. One is that they don't want to create the appearance of their possibly being some sort of a backdoor to the U.S. government, that other buyers outside the United States might be able to see that, oh, wait, the U.S. government has some means of following us, tracking us, finding us, knowing where we are, and maybe knowing what we are using these chips for. Yeah. Nvidia Corp, for instance, the maker of the most advanced AI chips, has insisted that there is no such backdoor, but it is theoretically possible, Matt, and it is something that's key to the administration's strategy of exporting more chips, more AI compute globally.
Not to sound like a crazy nut, but Mike, couldn't it already be there, a tracking device?
Well, it is theoretically possible that they're already in there.
I feel like it's terribly unlikely. You have a very small piece of real estate, and you're trying to put as much of the tiniest circuitry in the world on it.
I understand, but do you know what they already put on that tiny little circuitry?
I have no idea.
Amazing capabilities. So tracking, would that be such a big deal?
I mean, look how big an AirTag is.
All right. This is a little debate that Matt and I are having. All right. Mike Shepard, so appreciate it. Bloomberg News Senior Editor for Technology and Strategic Industries out there in our D.C. bureau.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I feel like I should go like this because there is something happening in the startup community, a twist, if you will. And this is according to a story out from our Bloomberg Businessweek team. You can find it on the Bloomberg and at Bloomberg.com/Businessweek. The twist is that a big tech company pays to hire a startup's top talent and license its technology, but does not actually acquire the company itself. And the remaining crew is left to pick up the pieces. Not a great way to be.
No, but I guess... it's kind of like silly season, especially in AI. So they're willing to pay anything to get not as much as previously you would have.
And they kind of want the people in a big way. Let's get into it because it is a Bloomberg Businessweek story and it's caught our attention and fascination, if you will. Bloomberg News tech and venture capital reporter Kate Clark is in our Bloomberg Interactive Broker story to tell us more. And as we mentioned, you can find her story at Bloomberg.com/Businessweek. All right. Welcome, welcome.
Thank you.
Tell us about an aqua hire. What is it and what's a reverse aqua hire?
So an aqua hire in startup land is just when a company comes in and buys another company, usually a small one, because they want the employees. They don't really care about the tech or anything else. They just want the smart people that are there. Now what's happening, and honestly, the name doesn't fully fit, but no one can think of a better name. So we're going with reverse acqui-hire for now. You have a bigger company come in, take some of the people, maybe like 5 or 10 or 20, and license the technology and then leave the existing company. So they're not actually buying the company. They're just taking the good people and leaving the company behind. So as you can imagine, not everybody is super thrilled with this new deal type.
What are the biggest examples of this? And I'm thinking of, I'm not sure if they all fit, but Microsoft with OpenAI, and then OpenAI with that Apple spin-off hardware company.
Yeah, those are actually not examples, but they are similar weird, silly things that are happening in startup land right now. The big examples, there's 6 of them. There are startups called Character AI, Scale AI, Inflection AI, a lot of companies most people haven't heard of, who have made deals with larger companies like Google and Microsoft to come in and take mainly their CEOs, their founders, but not the rank and file startup employees.
Why has this kind of shift, this twist started to happen?
There are 2 big reasons. One of them is just the broader antitrust environment. Like people at companies like Meta, they don't think they can actually get these acquisitions over the line. So they created something funky and silly instead. The other big reason is they want the talent really badly, and they want the talent yesterday, and they don't want to wait a year for a deal to close to then get that talent. They need them right now.
Well, and the fact that you have this insane concentration in the market, right, that gives companies like Microsoft and Meta so much capital. Doesn't matter if they have to pay $100 million for one person.
Try $3 billion. I mean, these deals are huge. And they, there's been many stories recently that have reported that people like Mark Zuckerberg are more than willing to pay $1 billion. And maybe that is on the far end of things, but to get some of these AI researchers in-house, because these companies feel they are behind OpenAI, behind Anthropic, and these are big tech, massive companies that can't afford to be behind startups.
Help me understand, because I'm thinking about early on in my career, and I worked for a media company that was bought by our competitor who was actually not doing so well. And it basically took some of the kind of key talent and some of our technology at that point. So it sounds like a very similar thing. So we've seen this kind of before. Is there something distinct or different about it this time around?
Yeah, I mean, I'm sure there have been cases of this before, but in Silicon Valley, there have never been such high profile, large deals like this before for companies that were otherwise seemed to be in a good place. There is a range. Some of these startups were not doing so well, but a company like Scale AI, I mean, that was a company that was generating significant revenue, was potentially plotting a massive IPO in the next couple of years. There was a lot, that wasn't a company that people necessarily expected would do a deal like this. So I think that's what's different, is the types of companies that are doing
I can imagine this happening on Wall Street with a hedge fund or in media. I would buy any company just to get you as an anchor on my show, and then I don't need the rest of the company. But I feel like especially in Silicon Valley, this guts the social contract of startups, right? You go to a startup because you're one of the best and brightest. You could go work for Google or Meta too, but you're hoping to, build something amazing, and then all of a sudden your CEO's the C-suite's out, and you kids are done with your jobs.
Yeah, I mean, people are not happy about that. There are people at these companies who do feel betrayed. Some of them have gone public with those complaints. We've seen many tweets from these people, and yes, it does betray the startup social contract. And I think what I'm hearing from the venture capitalists, the employees of these companies.
Well, that's what's also interesting. The venture capitalists are like, listen, I'm with you from the beginning, right? And I'm going to pony up more, and there's different rounds and so on and so forth. And then all of a sudden you're like, wait, you're out, and what's left for me?
Right. And in some of these cases, they get paid back first. So in many cases, they're getting their money back, but they're not making a profit. Or maybe they are. All of these have been structured differently, but by and large, this is not a great thing for venture capitalists who are hoping for a home run return with an IPO. This isn't really, they don't want to see their star founder jump to big tech.
Right. They need to know their founders, right? Maybe a little bit better if some of them are jumping ship to go to big companies.
Yep.
You talk about Microsoft back in 2024 and kind of point the finger at what they did. Do we blame them in some way?
No, I mean, it's interesting because we don't really know who architected the deal that we feel started this trend, which was Microsoft's reverse acqui-hire of Inflection.
Right.
We don't really know who was that person or who were those people. Reid Hoffman was a co-founder of Inflection AI. He's also a board member at Microsoft. So, I imagine he played a role. I would love for him to talk about how that came together. But it is quite an original method, and I think for a while people were like, oh, so tricky, this is going to totally work, get past antitrust scrutiny, no one will notice. I do think at this point there have been enough that you wonder, how is the FTC going to respond? They do have investigations into several of these deals already.
They do.
They do.
Yeah, because this is meant to, or is a way to get around regulation, but still has a lot of the same negative consequences of the things that the regulation is meant to block in the first place.
Mm-hmm. So what happens to these companies that are left behind? Do they survive? Some don't? Do they shift their focus? You write about this.
All of the above. Some of them have not survived and have basically become what we called zombie companies, where maybe a couple people work there to kind of like keep filing a few different paperworks, and then eventually it shuts down. A couple of them have really worked hard to stay afloat and are planning to raise some more money to help. That's Inflection and Character AI, which is a pretty well-known chatbot company.
Right.
But yeah, a lot of them have pivoted because they've had no choice, because they've lost, the original people who had the vision and maybe the skills for what they were originally building. They've had to pivot to kind of figure out, who are we without those original geniuses or whatever it was that started this company? There's
part of me that says all's fair in love and war and capitalism. And so I do wonder like how that plays out.
I love that part of you, Carol.
Thank you very much. But I mean, I also wonder about, are venture capitalists then going to be thinking, all right, I don't know, is there something that they write into future investments? Has it become a little bit stickier for those startup entrepreneurs?
I think, that's a really good question that I've asked. And, it's funny, I think right now the answer is no, because venture capitalists right now have no leverage with AI founders, because everybody wants to give all these AI founders $100 million, $1 billion. They're competing with every venture capital firm. They can't be like, well, you also promised me that you won't make a deal, with Microsoft. They can't do that. So for now, no. I think, let's see how the market changes. Let's see where the AI boom, does the bubble pop? Then things will change. For right now, I would say like the venture capitalists don't have a lot of control over these situations.
It does feel like an AI power grab right now.
Yeah.
In
Kate,
so many different ways.
In your reporting for this story, did you talk to anyone who did say like, this is a ridiculous amount of money being spent, and it's just reminding people of 1999 or, another period when valuations were so frothy that people were just throwing money out the window?
2021 is what comes up the most often. The bubble that occurred, during the end of the pandemic era, the zero interest rate era, that is mostly what people compare it to. I mean, absolutely, yes, you could compare it to the dot-com boom, or even like the crypto boom, or there have been many of them in the last 20 years. And I think people right now have a lot of concerns about some of those similarities.
What I love about these stories, and Businessweek does this so well, it's like a big trend that's happening, and we talk about the execs and the companies and where things go. But, at the end of the day, there are people that are left in offices, and I'm assuming you talked to a bunch of them. Tell us about like just some of what you heard from those folks who are kind of left behind.
I mean, we heard like after one of these companies, Windsurf, after they completed a reverse acqui-hire, we heard that there were many employees who were like sobbing in the offices that weekend, and were devastated by it. And I think it really just damages, like we said, the trust in this system. And if you're just an average person working at one of these startups, which, there are startups all over the country, all over the world, not everybody has the same understanding of like what this is. And I think it's just confusing, and it's just created a lot of confusion and distrust in this Silicon Valley world.
I would say it's a risk, right? When you go to a startup, risk reward, but there's also, maybe things are intensifying because of this, especially when it comes to AI and the grab that we're seeing. Really great story, great reporting.
It's a new risk, right? It's a risk that you wouldn't have thought of a couple years ago.
Yet another risk.
Right. Yeah. Another thing that you kind of layer into this. Kate, thank you so much. So glad we could get some time with you. Bloomberg News tech and venture capital reporter Kate Clark. Check out her story. You can find it on the Bloomberg and at bloomberg.com/businessweek.
Are you here? Are you based out of New York? Because you wrote the story with Sharon Gaffrey.
I am based out of New York, yes.
Yeah. Really, really well reported story, and a great read.
Thank you.
On the Terminal or in Businessweek.
Like a snapshot of where we are right now on so many different things.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
So we're keeping a watch on shares of Axon, gaining as much as just shy of 19% today, intraday, the most since February, enough to reach a record intraday high. Right now, the stock is up just under 15%. This is after the maker of tasers and other public safety equipment reported second quarter earnings per share that topped expectations. Analysts also noted strong bookings for the company's AI plan. What?
Look at the 5-year chart.
I know.
I mean, who cares about today? It's up 825% over the past 5 years.
It's had quite a run and a big move today. I should point out that coming off of earnings, several analysts, including Barclays and TD Cowen, raising their price targets on the stock. It is up more than 40% year to date. Let's get to it. Delighted to have with us Rick Smith, founder and CEO of Axon, to talk about the business, the outlook. Welcome, Rick. How are you?
I'm having a good day.
All right.
It's doing great.
You are having a good day. Talk to us about the business. Who's buying? What's going on? We talk about tasers, but you go to your website. You guys have videos to remind us that you guys are not just about that. You're about a lot more.
Yeah, that's why we changed the name of the company to Axon a few years ago, because tasers, it is a sledgehammer brand associated with our less lethal weapons. That's where we started. That got us into body cameras to basically help protect the public and police by preserving a factual record of what they did. And then from there, we got into cloud software to manage all the data, and then the business just exploded. So today, we're the market leader in in-car video, obviously body cameras, record management systems, and drones and robotics through their partnerships or first-party things that we do. We're, I think, the largest virtual reality training business in public safety. And now we're also expanding into adjacent markets. Any enterprise that has a security function has to be able to communicate with their local police. And you can either do that through an old school 911 call, or we have a number of tools on our platform that allow you, for example, if you're a school or a business, to share your security cameras in an emergency with police. So if you have something like an active shooter, you're not trying to describe it over the phone. You can immediately give video access to law enforcement at your control. You can shut it off when it's not necessary. And then, of course, we're layering artificial intelligence across this entire enormous network of sensors so that we can, try to make everybody a little bit safer. But also doing it in a way that, is very cautious about privacy to make sure we're doing this in a way that doesn't create, out of control surveillance.
Rick, your investors will know, analysts will know, but not everyone is familiar with your founding story, which is intensely personal. Give us a quick recap of that and tell me if you still see the company's mission, which is cutting police gun deaths, as realistically achievable in say, this decade. Yeah.
So I started this, I was in business school in Europe, and I was having dinner with some people there who were, we were all talking about our hometown, and they said, I would never go to America because of all the gun violence. And I said, well, hold on, it's not like you see on television. And then one of them asked me, do you know anybody who's been shot and killed? And as I thought about it, well, yeah, there's 2 guys from my high school football team. And look, we weren't super close friends, but that's not the point. The point of it was that all of us, I mean, I bet each of you know people in your immediate circle who've been shot and killed. This is a problem that touches everybody. And by the time I added it up, I think I know 5 or 6 people who've been shot and killed. And that just struck me as a bizarre state of the universe, that the way we protect ourselves in the 1990s, much less 2025, is shooting bullets at people. We were doing that with like pirates in the 1600s. And so we're on a mission to make the bullet obsolete by creating better technology, basically something similar to Captain Kirk's phaser from Star Trek fame. That's what we're out to build, because if we have that weapon, it would no longer make sense to shoot anybody. And yeah, we're getting pretty close. It's not wireless like Captain Kirk's, but we are approaching a level of reliability where we now have countries outside of the U.S. talking about using the taser instead of a gun. In the U.S., we wouldn't suggest that, but we can suggest that the taser is getting to the point where you would use it first. It would become your primary weapon, and the gun would be more of a backup only for the most extreme cases. And if we achieve that, then yeah, we think we can cut gun deaths in American policing by 50%. By 2033 is our goal. So,
as you can understand, we're all feeling a little sensitive this week here in New York City following the active shooter at a office building on Park Avenue last week, where individuals lost their lives as well as a policeman lost his life. So tell me about the numbers where you are seeing that as a result of your devices, that things are getting better, at least for, police folks and security folks.
Well, we have not yet bent the curve, meaning we're not seeing the numbers coming down because the overall trend is still slowly inching upward, although this year it's lower than last year. But I think it's premature for us to claim that that is our effect yet. We do know that over the past 30 years I've been doing this, there's around 300,000 uses where police could have been legally justified to use lethal force, but they were able to resolve it with a taser instead. This next 2 years is going to really be critical because up until now, taser weapons have been largely used not really in the most critical situations. They would use it to capture somebody who is potentially violent but not an immediate risk. We've introduced a couple of key technologies that we're testing now in the field, and I can go into detail if you're interested, that we think move our effective reliability up into the 99% area, at which point then we think it becomes reasonable that police would begin using taser as their primary first weapon, always keeping the gun as a fallback.
Rick, you mentioned business school in Europe. I guess you went to school in Belgium before Chicago, but you studied first neuroscience at Harvard. How does that kind of background influence your decisions today at a company that, touches so many nerves?
Yeah. Well, I mean, the whole name of the company, Axon, is a little bit of neurobio geek speak, because the axon is the name of the long nerve fibers that connect your brain to your muscles. And indeed, it touches a number of ways. When I first wrote my college application, and actually showing my son, I had a copy of it. They asked, what do you want to do with your life? And I said, I wanted to build robotic limbs. And it was like Luke Skywalker's, robotic hand. I love this idea of a machine that can interface to the human body and almost become a part of you. Then after this incident and my interest rising in gun violence, I took a different turn. Instead of building a machine that your brain could control, I build machines that control your body through your nervous system. I mean, that's what a taser does. We plug in, we tune this electricity so that it overwhelms communication, and you have something that looks like a seizure because we're flooding your nervous system with electrical energy. Your muscles lock up. I just saw 5 people volunteer here in my office this morning. It is a temporary effect, but it's extremely debilitating. And then if we think about the other parts of our business, when we got into the camera business, we realized the cameras themselves are kind of interesting, but it's not nearly the business that if we can connect all these sensors together and begin to think of this like a giant neural network. Like for a police department like an NYPD with, 35,000 officers, what if we could begin to have live data feeds that would enable command and control in more real time? So we could identify, hey, this situation is escalating. Let's send reinforcements before the officer even calls over the radio. Or we might even identify things like, hey, this situation over here is spinning out of control. If you think about all the horrible, policing situations like George Floyd over the past 10 years, I believe now that any one of those could be detected with AI running on the audio video feed of a camera. And that is a capability that we're building now. We do have live feeds now, but to have live feeds being AI monitored in real time, that'll happen in the next 12 months. And I think that's going to be a huge boon to make policing more effective, safer, and to help agencies identify if a situation's spinning out of control so they can intervene now instead of, prosecuting somebody tomorrow, if something wrong is happening.
How much of your business is governments? And I'm just curious, it does feel like there's going to be some municipalities under pressure in terms of funding. And I'm just curious how that could play into impact demand at your company.
Yeah, so we're still majority government business, but the fastest growing segment is enterprise. And so the enterprise security is 2 to 3 times larger than public, policing in the United States in terms of manpower. And so there's a huge opportunity there. But if I come back to your question about municipal policing, I remember the 2008 financial crisis and others. And what we have found is if you look at a police agency, the majority of their spend is on cops, cars, and gas. That's like 90-some% of their spend. Mm-hmm. So their tech spend is a relatively small portion of their overall budget. And when budgets get compressed, what we see is they really look to technology where they're saying, look, we need to get more efficient. We can't just throw bodies at things. And I'll give you one example. Our first major AI product using generative AI is a service called Draft One. And what we do very simply, we take your body camera footage, we feed it through an AI model, and we actually just use the audio. We don't even need the video. We use the audio track, and we do the first draft of your police report. Because it turns out, police interactions are pretty standard. Hello, ma'am, what's your name, date of birth? Do you know why I stopped you? And you can, from that, extract the information that we need to put the structured report narrative together to about the 80% completion. And that basically means we're cutting the amount of time police spend on bureaucracy by up to 60 or 70%, which means they're out doing more police work.
Huge, because only 14% of police departments across the nation are actually fully staffed. And in the most recent survey, 75% of police who responded said they do want AI to help them out. It seems like, and this is not a pun on your neuroscience degree, but it seems like a no-brainer.
It's a little bit of a pun.
I'm a little biased, but I think so.
Hey, just 30 seconds. I'm curious because we talked about, I think robotics kind of came up, and you talked about your interest.
Empire Strikes Back. The last scene, Luke Skywalker with his hand.
Yes. Is robotics something that you guys are thinking in terms of security going forward? Is that an area that you guys might pursue at some point?
Stay tuned. The solution to the American gun violence problem, in my personal belief, is we've got to change the game. And what I mean by that is today when an active shooter shows up, they have no illusions they're going to come out of it alive. They want to go down in some sick, twisted vision of a glorious gun battle with the police. In a couple of years, we are going to deny them that. If you show up with a gun somewhere, we will zip in very quickly with a robot using less lethal force. You'll be arrested and under control very quickly, and we're going to deny them the entire sort of motivation to get in gunfights. And I think we can do things with drones and robotics that you can never do with people, and we can do it without having to resort to lethal force. So stay tuned. We're making a big play in that space.
Sounds like you got to come back real soon. So appreciate it. Rick Smith, Be Well, founder and CEO of Axon, joining us on this Tuesday. And as we mentioned, we're seeing that stock move in a big way following its latest results. Let me just pull it up for you.
Can I add that guy to the list of guests?
Don't take him.
I steal from your show
you steal
and
everybody.
Use on my show.
Do not have Matt co-host anymore. Done. All right.
No, what a story. I mean, what an incredible... The stock chart is amazing.
I know.
But the story behind it...
Right.
I mean, he started that company in 1993.
Well, he's
been at this for 32 years.
I love these people who have different backgrounds. It's like doctors who are engineers who are looking at the body in a different way. But here he is in terms of his background and understanding how the brain works and the impact on things.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.